Welcome back to 7 Minute Options on this Tuesday, the 29th of June. Got a busy show for you here. Okay, so the only good news really over the last 24 hours here is EWZ hit its GTC target of 27 cents, so we bought it back automatically. That filled just a few hours ago. That being said, that's about, like I said, that's the only good thing that's happening really. Right now I'm down another few $100 today. A lot of red across the board. It's not driven by one or two, but driven by a whole bunch of different things. So anyway, putting on a bunch of positions today. So let's start with GDX. Just putting on a normal strangle here. Going out to the August expiration, 52 days away. And I'm going to try to sell the 31.38 strangle. Let's see here. Yeah, I mean, I'm not particularly excited about it, but it's as good a spot as any. So going to the 20 delta roughly on both sides, right? 18, 19 on these ones here. So roughly the 20 delta range. Again, the IV is not particularly high. I mean, it's there. The IV is roughly more or less in the same place as it was over the last 5, 6 months. And GDX has been going somewhat sideways, move down, move back up. But interesting enough, the Bollinger Bands are quite wide. You can see IV picking up a little bit. So anyway, I'm gonna put this strangle on. $385 buying power I'm giving up, getting 2 theta in return. And the positions are naked, so if they get challenged, I can go inverted, I can roll out, etc. So I'm gonna see if I can get the full $78 of credit there. And I'm gonna try to, oh wow, that one filled right away. Okay. Um, yeah, and with these ones here, I mean, if this was 40, 45 days, I try to go to 50%. Again, the IV is quite low. I don't want to hold this for a particularly long time, but um, the farther I go out in time, the less I tend to go for. So if I would open up this like 60 days to expiration, I would try to go for 25 or 30%. So here, I'm going to try to go for about like 35, 40-ish, right? So yeah, let's go for $45. Yeah, so that's hoping that's going to be an easy 20, $30 over the next 2 weeks or so. Again, not a lot of good premium out there. The IV is low across the board. Um, there is an earnings play in Micron Technology, so they report earnings tomorrow after the bell. And I'm going to do the typical Jade Lizard like I usually do. So I'm going to go 10 days out here, looking for the 50 to 40% volatility crush here on the IV. Not a lot, but it's okay. So I'm going to go for the 79 put. So collecting just over $1 there. That's about the 26 delta. And then selling the 88.89 over here, just outside the expected move here on the 24 delta. And collecting 120. Again, no risk to the upside. Let's see if I can get that filled. All right, so I'm going to leave that on for a few minutes. The next one I had was GPS. That's Gap Inc. And yeah, this one is just going to be a normal Jade Lizard. If I go look at this one here, the August expiration, 52 days out. I was thinking about putting on a strangle, and if I would put on a strangle, I would just go for the 30 put and the 36 call. And again, there's no earnings coming up, and maybe this is not a bad way to play it. If I look at the actual graph, where does 30 and 36 land? Let's see, that is the 30 and that is the 37. And yeah, the 37, so last time it hit 37, it touched 37 3 times back in May, and it kind of retracted from those all 3 times. It bounced off the $30 on the downside a few times here, most recent being in early June. But this is like 50 days out. Anyway, I feel like with 202 credit, I can do this. Again, there's no earnings coming up. If there were earnings, um, I would not be doing this. I would try to cap the risk on the upside. So let's do that one. 52 days out, $200 in credit. And if this gets filled, and I think it'll get filled. Okay, actually, let me see. As soon as it gets filled up with the GTC order on, so I'll take the MU1 down a few dollars. Now it's down to $1.16, which is still okay for me. I'll try $1.17 there. It's bouncing around that number. And then go back to the gap order 202, 201 maybe? Yeah, there's not a whole lot of people in this particular one, right? I'm going out to 30 expiration here, 277 people. It's got an 8-cent wide market, not particularly liquid. And on the 36 side, we have a 7-cent wide market with 580 people in it. Yeah, this isn't the greatest, but right now with Gap, the IV rank is 28, so the IV is quite high. So I'm looking for some kind of a retraction in the volatility. It's been going mostly sideways, which is what I want to do if I'm selling a strangle. The RSI is in the middle, not knowing where it wants to go. So it feels like this is good. It's a good setup for a strangle. I only want to hold it for a few weeks, collect maybe 40%, 30, 40% of the premium here. So maybe I'll just go a little bit lower. But yeah, because the markets are wide, it's tricky to actually get the actual numbers. So even though the computer's telling me it's like 202 or 201, it's tricky to get that filled because there just isn't a lot of activity on the buy sell side. Okay, so I did open another bullish position in SoFi yesterday. So taking a quick look at SoFi, what happened was on the 28th, a lot of the early investors, right? These are the people who were either involved in the founding or the Series A or Series B round of financing. This was the first time since SoFi has gone public that they were able to offload their shares. And so that's why there was a big sell-off on Friday, right? It gapped down and went even further down is because people were worried that on Monday, a lot of these individuals were going to dump large amounts of stock, which was going to drive the price down. Interestingly enough, it did not happen. Look at the huge spike in volume, which is this transparent or translucent green bar. So a huge volume spike on Monday, a lot of activity, but it didn't actually drive the stock down. On the contrary, I think the down move on the gap down on Friday already accounted for that move, and so it actually bounced back on Monday, and now it opened up really high today, but it has kind of coming back now. So it's actually at the same place where we closed yesterday, which is actually pretty good. It's around 19. Yesterday, just before the closing bell, I did open another bullish position. So what I did there was I sold a $15 put, 570 days out, and I used it to finance a broken wing butterfly on the upside with no upside risk. The 25, 35, 40 broken wing butterfly, again, 570 days out. Very bullish, and again, it's one of those where even if SoFi does to spike a little bit, this is going to take a long time for the money to come in. Yes, I could potentially make $2,000 here. It's $1,000 wide, but I have 2 contracts here. So I could make 2,000 potentially. It's a lottery ticket type outcome, but in reality, if this gets up to 500, 700, 800 or something, I would end up closing it. So hopefully I don't have to hold it for that long and I can close it for maybe 1/3 to 1/2 of my maximum profit there and get rid of it. And interestingly enough, I'm so bullish on SoFi that I'm thinking about opening up another bullish position just because there isn't that much out there. There isn't a lot of good premium out there to be had. If you guys have any good underlyings that are like rich in premium, let me know. Anyway, the one way to play SoFi, for example, I was thinking is if I go, let's say, 52 days out. Actually, I'm already there in August. No, let's go longer. If I'm bullish, I need more time. Let's say like 108 days. That's October of this year. I can sell the 15, right, for 160 or 17 and a half. So let's say I sell the 17 and a half for $289 and I buy the 25 for 275 roughly. And I actually keep 33 in credit. And if it goes above 25, that's great. I'm having naked call. So I own the naked call here. So this is great. This has unlimited profit potential in theory. If it goes below 17 and a half, then maybe I just pick up 1,000 more shares for $1,700. And all in all, this position nets me 33 credit. Not a particularly good one. Maybe another way to look at it is if I sell the 20 and I can buy the 22 and a half and collect 150. This way, I collect 115 credit between now and 108 days from now. And if it doesn't climb above 20, then I pick up 100 shares for $20 a share, which I'm okay with because I actually like SoFi. As a company, I don't mind owning more shares. Actually, I don't own any shares yet, but if it does get to that, it's naked. Maybe I can roll it. Maybe I can pick up shares. So I'm not too particularly concerned about this. It does give up $1,000 of buying power, which is a lot. But that being said, I'm willing to do it just because I want to get something on there. I want to start using some of this buying power. Um, anyway, I'm going to do this. So wish me luck. And let's see where this ends up. So that's, yeah, so that should get filled. It's actually less than the market right now. So let's go check on these positions. I got to go a little bit lower in MU to get that one filled. Let's try 115. We'll hold that for a few minutes. And let's try, what was the other one? GPS not getting filled. Come on, GPS. Let's try $1.98. And if it doesn't get filled, then I mean, like those particular options are not that liquid. Then maybe I just won't open that strangle. You know. Actually, you know what? Let's look at this order real quick here. Yeah, I got a 6-cent wide market there. I have a 10-cent wide market there. As a setup, I mean, it's a good setup. I don't want to take this lower or higher. Yeah, and right now the midpoint is 2 credits. So I'm just going to leave this on for the rest of the day. And okay. Let's put it back on. So order, there we go. $1.98. Okay, let's see if that gets filled. So I'm going to leave that on for the rest of the day. Hope it gets filled. So those are the positions I'm opening. And we got GPS, Micron, SOFI, and yeah, let's see where this goes. All right, thanks.